What's happening, everybody? It's your boy Kreative. Go ahead, say it with me. We are back to do what? Create something great. Now, today we're going to be picking up on our paper trading that we started earlier today. So if you want to go check out part 1 of that video, it is just before this stream or this live. And what we're also going to be doing is creating a new bot. This is going to be our Nightcrawler bot. This is going to be the first bot that is going to hold a position overnight, such that we are able to carry on the momentum that we see coming from the overnight. So I don't know if it's going to be SPY. I don't know if it's going to be QQQ yet. Now, if you've been following us, those are the two ETFs that we like to use. An ETF is an exchange traded fund. So I don't know if it's going to be either of those yet. So I really do appreciate you all joining us today. For the first couple of moments, what we're going to do is review. Again, I do have my the bots running live today, so I want to keep an eye out on them as well, just to make sure there is no issue. If you do have any questions while we're going through this, please feel free to be able to ask. All right, I just wanted to check my levels. My levels are Gucci, because like I had some problems with the levels earlier today, y'all. Like it was taking me, damn near took me like 15 to 20 minutes to be able to get them, get it complete. Shout out to Amir. I really do appreciate you being able to assist me with that. So you are the real MVP for that one. Now, right now we do have, let me just pull up our bots so I can talk about that real quick, so you can understand the 6 different type of bots that we have running. Then after that, I'm going to, I thought his position was open. All right, so I'm just going to briefly go over our bots so you can understand who they are, what they do. Oh, hold on. There we go. So I use Cursor when it comes to being able to code, right? And within Cursor, I use Claude Code. So there's going to be a bit of, and again, what I'm going to do is take no assumptions, right, that you understand how to code. I'm going to take no assumptions that you understand the market. So for the first 15 to 20 minutes here, I like to call it office hours. And today for office hours, I'm going to go over our bots that we're running today. And then after we go over our bots, and I think I'm only going to take like 10 minutes here, I'm going to jump straight into creating our new strategy, right? And this is going to be a Nightcrawler strategy. And the main point of this strategy is to be able to find a breakout or breakdown, or excuse me, I don't know if it's going to be breakout or breakdown. I don't know if I'm going to take an indicator from TradingView yet. I don't know if it's going to be pattern based. Let's see how I feel, right? And I'm going to take it as that. And you all are going to see the entire process from start to finish. And I'm going to be using, again, Cursor. I mainly use Python, and within Cursor, I'm going to be using Claude Code. So a few things we're going to be doing, and if you have any questions, please let me know. Before I get started, I just realized something. Give me 1 second. I just want to check that we are Gucci, and we are, fam. We are, fam. All right, so let's go over the first bot. Fadebear, I'm not running today, so I'm not going to go over Fadebear. I'm just going to go over the bots that I'm running today, right? So the bot that currently is running right now, so I'm going to bring them up so we can talk about it and then review what the bot is actually doing. Hold on, let me talk about it first. Once I talk about it, then I'll bring the bot over so we can see a little bit about what it's doing. So this is Meaniebear. This bot chases, or excuse me, it trades SPY, and SPY is the S&P 500. Now remember, the S&P 500 is the top 500 companies within the New York Stock Exchange. Excuse me. Bro, just listen to me. There we go. Go back to your corner. It is the top 500 companies within the New York Stock Exchange. Let me show you all a few of the holdings, right? And this is a couple of things that we do a few times, but I want you to see some of the holdings so you can understand some of the different companies that are within the New York. Okay, holdings. Just click holdings. Right. So some of the top 10 holdings, right? We have Nvidia, we have Apple, Microsoft, Amazon, Broadcom. This is Alphabet A is Google. This is Facebook. Alphabet C is YouTube. We have Tesla. Then we have Berkshire Hathaway, right? So this is SPY. Now we also have QQQ, but I'll bring that up once we get over to being able to understand it. Oh, I got to remember to hit the arrow because I'm used to dual screen. So I have 2 screens right now, but when I'm streaming, I have to go back and forth between the screens. So I'm sorry. I didn't hit the arrow, so let me go over this one more time so you can see it. Nvidia, we have Apple, and these are just the top 10 holdings within the S&P 500. Now, there's 500 companies within this ETF. An ETF is an exchange traded fund, right? ETF, exchange, E, traded, T, fund, F, right? When you think of an ETF, think of it as being a quilt. What I mean by a quilt, everybody knows a quilt, right? Quilt. All right, let me just pull up any quilt. Beautiful. We have a quilt. I'm not talking about the baby layer. Just pull up the quilt, right? So we see the quilt. Each patch within this quilt, right, represents a different company, right? So with this particular ETF, we have 500 different companies. The reason I like SPY, right, this is the top 500 companies within the New York Stock Exchange. An example of those would be Nvidia, Apple, Microsoft, Amazon, Broadcom. This is Google, right? This is Facebook. This is YouTube, Tesla, and Berkshire Hathaway, right? So these are just some of the companies that are within this ETF, right? So that's why I love trading SPY. And Meaniebear is the simplest momentum bot. It trades breakouts, so price moving beyond the recent range with no filters. It trades in all markets, designed for calm trending markets, right? So how it operates is always active. It analyzes the last 5. I gotta remember, I gotta toggle back and forth. Right now, I need you over here. Then I'm going to come back over to the chart so we can understand it. So let's read it. Then I'm going to go back to the charts, right? So it analyzes the last 5 bars, right? And then the required volume is greater than 88% of the recent average. And we're finding 0 DTE options, right? 0 DTE meaning these are options that expire the same day. And the delta range, right, is from 0.10 to 0.35. What delta is telling us, this is telling us the probability of profit for the underlying option contract, or, right, it is telling us, right, what is the relation if the stock price moves $1, right? If we buy a delta of 0.10, then the underlying option contract is going to move $10. So a delta also tells us it's not only the probability of profit, but it tells us if the stock price moves $1 or loses $1, then the option contract will move by its underlying delta. So the delta that we're using is anywhere between 0.10 and 0.35 for this particular bot, right? Dynamic position sizing, meaning we start at $100, and then all of our bots start at $100, and then it can use 90% of the balance until it's at 500. Then when it's at 500 to, I think it was 1,000, from 500 to 1,000, it can use 60%. Then anything greater than 1,000 is 30%, right? Exit monitoring, we constantly check. So this is how we enter the position, right? This is how we exit. Excuse me. I just say this is how we enter. This is almost how we enter. This is how it operates, right? This is how we enter the position. We analyze the last 5 bars plus the current. So that's 6 total minutes. Each bar represents a minute. So here, an example, right? So this is SPY. SPY, remember the S&P 500, the top 500 companies within the New York Stock Exchange. Each one of these candles represents a bar or a minute, right? So what we do with Meaniebear, right? Meaniebear is going to look, remember, it's the past 5 bars and then the current bar. So what it's going to do, if I can get this to cooperate with me, it's going to look at the past 6 bars. So 1, 2, 3, 4, 5, 6. And remember, we use 1 minute, meaning that, wait, is this? This is Ethereum. How did I get to Ethereum, fam? Here's SPY. I am so sorry. How you notice is Ethereum, because on the top left it's supposed to say SPY. Over here it say Ethereum. I don't always, but I do meme coins and cryptocurrency, but I'm going to do that like much later, fam. All right, so right now I want to focus on options. So we're doing SPY, the S&P 500. How do we know? It says it up here. And remember, each one of these bars represents 1 minute, because we only use 1 minute time frame, right? Because that's the most success that we've seen here, right? So what Meaniebear is going to do is going to look at the past 6 minutes, right? So 1, 2, 3, 4, 5, 6, right? The first 5, it's looking for a breakout, right? It's looking to be able to determine, all right, is it a breakout or is it a breakdown? Then once it figure out it's a breakout, it's going to buy a call or put respective of what we see, right? And then it's using the last bar to be able to determine to confirm that. Does that make sense? So let's go back to cursor. It calculates the 5-bar high and low. Then it gets the current price, breaks above the 5-bar high, 0.05. We're going to buy a call. If the current price breaks below, right, the 0.05 of the high, we're going to buy a put. The volume of the current buy must be greater than 0.88 times the average for the last 5 bars. And the time frame, we only trade this bot between 9:30, just to make sure. Okay, it doesn't say it there. But this bot, let me just bring it so you can see. This is the bot right here, right? We only traded between, let me just double check. Well, somebody just opened up an order. 9:45 and 11:30. Let me see who opened up an order. Somebody just opened up a SPY order. Again, I have 6 bots running. So somebody just opened up a SPY order. Let's figure out who opened up the SPY order. I bet it was Lotto. It was Lotto. I told you I didn't even get to Lotto yet. I didn't even get to Lotto yet and opened up a position. So let's go look at it real quick. So we're bearish on the market. So we found a bearish breakout, right? And this is trading SPY, the S&P 500. So we are buying a 674 put, and we bought it for $43. So let's see how we're doing right now. Right now we're down 12%, 14%. Oh, wow, we're about to hit the stop loss. So let's see if the position returns. Again, this is all live. This is going on right now, right? And I'm glad that you all are able to see this because not everything is guaranteed, right? So there's going to be moments where the position goes and it goes well, but there's also going to be moments we're seeing that, okay, it's turning. And this bot only holds it for a maximum. Let me go to Lotto real quick so I can talk about Lotto while it is trading here. So what Lotto does is the most sophisticated of our bot, and I really love Lotto because this is the first bot that I ever made. So all right, we just closed the position. Look, we just closed the position. We closed it at a bit of a loss. It was going against us, and we hit the stop loss, right? So we hit the stop loss. We only held it for about a minute and a half. We closed it at a $12 loss right now. Oh man, I really need you to be open. Give me 1 second. Now IBKR is acting up. Give me 1 second. Have to log in real quick. I know. Give me a second. Give me a second. There you go. I don't know why, but it was big tripping. Okay, we should be back up. We are back up. This is our paper account. All right. We should be Gucci. Let me check our bots real quick. All right, nobody should be having an issue. 1, 2, 3. I'm missing one. Where are you? 1, 2, 3, 4, 5. Where's oh, that's funny. You right here. I got to close you down. There you go. All right, so everybody's good. Everybody's running. So that was nice. You got to see a position live was open for one of our bots, and this was Lotto bot. So let me, since I'm talking about it, and we saw a position open up live, let me talk about this real quick. Then I'll go back to, and I'm going to try to make this a little bit quicker so we can get into our coding. All right. Lotto bot is the most sophisticated bot with a VIX adaptive parameter and the optional machine learning filter. It adjusts entry thresholds, profit targets, and stop loss based off the current VIX level. And VIX is the volatility index, right? Volatility lets us know what's going on in the market right now. The reason I like to use VIX is because VIX follows SPY. Remember, SPY is the S&P 500. So VIX allows us to see, okay, how fearful the market is right now, how much panic, how much angst is in the market right now. So that's why we created this particular bot. And again, this is my first bot. Like, I'm super geeked about this bot. It's a little bit of nostalgia if you would, right? Like everybody, like it's acting, and I understand I am anthropomorphizing these bots like crazy, but hey, you spend enough time with them, whatever, you don't care. But nonetheless, I really do fuck with this bot. This is one of our cool bots that we started. It uses machine learning to filter out low probability trades. How it operates: it fetches the current VIX price and selects the adaptive parameters. Optional, it checks if the market is trending or choppy, right? Similar to Meaniebear, but with a VIX adjusted threshold. Optional, this bot does have machine learning to predict the win probabilities. Skip if the probability of win is less than 30, right? Option selection, the bot finds the 0 DTE. Remember, these are options that expire the same day. With adaptive delta range, dynamic exit, the stop loss and the hold time adapts based on the VIX and implied volatility. Now, the difference between VIX and implied volatility: VIX is going to be current, real time, what's going on in the market right now, right? Implied volatility, or IV, is going to be based off the underlying contract, the option contract, right? So the reason we want to be able to adjust our stop loss, and every bot has its own little quirks, right? Because I was thinking, all right, this would be a cool idea to try, or this would be a cool idea to try over here. So every bot has its own little quirk, has its own little uniqueness about it, for lack of better words, right? So there are going to be some bots that use IV, some bots that you don't use VIX. There's going to be some bots that use VXN. That's VXN is VIX's big brother, right? So they're both the same. SPY is to VXN as QQQ. Excuse me. SPY is to VIX as VXN is to QQQ. All right. Entry conditions: when VIX is greater than 31, we skip the ranges 20 to 25. Optional filter, regime filter, the market must be trending, not choppy. Pattern breakout, we're looking at a 5-bar breakout within the VIX adaptive threshold. The volume must be greater than the amplifier. So the volume must be 102 to 108%. Again, every bot is going to have its own little characteristics about them. This bot also has a machine learning filter. The time window, it only trades between 9:45, as you saw, and 11:44. So about another 48 minutes, right? All of our bots are going to be done. These bots only trade in the morning, besides this Nightcrawler bot that I'm going to create here with you all. Now that I'm thinking about it, this bot most definitely needs to be QQQ. Reason being so is because I don't have overnight data for SPY yet. So I'm not going to make you wait for the data. So this bot, the overnight one, is going to be QQQ. And I'm really excited how that's going to work, because this bot is going to find an option that we can purchase overnight, being able to grab the momentum, right, from any overnight, whether it be a bearish momentum or a bullish momentum. And then once the bell opens, it only holds it for a maximum of 30 minutes, and then we sell. So I'm interested to see how that one's going to work out. And again, I don't know if I'm going to do it candles or be able to bring out. You'll see when we get there. You'll see. I'm really excited about that. We have the option filter. We have the profit target. Profit target is 210% or 270%. And then this has been updated. Super updated, because we noticed that this is a bit aggressive, right? So profit target, let me just pull up the bot. And then after this, I thought this was going to be a little bit quicker. Like, I don't want to spend all this time just going over profit target. Let me just go over the profit target real quick so you can see the actual bot. Again, I told you all of our bots start at $100. It's in paper mode right now. And then I want to show you the profit. Oh, okay. The profit targets are still the same. I lied. So profit targets. No, we're using the 3-tier one. So I wasn't tripping. Profit targets is a 3-tier profit target, right? It's 68%, 48%, and 28%. Now, the reason I'm using these levels, right, because I found success using 68, 48, 28, right? That's not to say, and I like numbers that end on 8, right? But nonetheless, that's not to say that we can't use 67, 47. It's just a matter of being able to backtest. Now, remember, what is a backtest? A backtest is being able to drop our strategy in a time machine and then throw it in 2024 and then see how well it performs within the 2024 market, right? Then we're going to adjust it to say, okay, you know what? Maybe instead of having a min and max premium of this, right? Let's try something that's a little bit more loose or tight. Loose meaning, okay, you know what? Instead of having 0.5, let me try 0.2, 0.3, right? And then 0.6. Tight meaning that, all right, let me do 0.10, right? Or 0.40. So tight meaning to be able to constrict it. Loose is be able to relax it a little bit, right? So we've done that for this strategy, and it went very, very well. Now I want to get into a brand new strategy. So what I'm going to do is let's go ahead and close this baby out, because I feel like I've talked enough about all of our bots. I mean, if you want a quick overview on them, okay, let me just do a quick overview of the bots. And then we talked about Meaniebear. Let me talk about Momo. Momo is the fastest scalping bot. It trades QQQ, not SPY. It's looking for a 3-minute, 3-bar rolling breakout with a 1-minute confirmation, designed for quick in and out trades with tight stops, right? Then we have our Lotto. Already talked about that one. Then we have our QQQ Sniper, the time strategist. The Sniper trades QQQ breakout with unique time-based profit targets. The profit targets change based off how long the position has been held. Earlier exits get big targets. Later exits get smaller targets. Then we have the Belair bot. This is our sprinter. The Belair is the fastest signal bot. Only 2 bars needed, 2 minutes. Right? It looks for momentum continuation, and if the price was moving up, it continues up, and then vice versa. It's designed for quick momentum catches, and it trades SPY, the S&P 500. Then we have our Starbaby bot, and I really love this one. I'm not gonna hold you. It's like asking a parent which child that he loves the most, and I understand these are not kids, but in a sense, whatever. Let's keep going. Starbaby recognized the classic candlestick reversal patterns, the evening star for bearish and then the morning star for bullish, right? It trades these reversal patterns with no VIX filter and working in all market conditions, right? So key differences is that, okay, we talked about that, market conditions, entry and exit. So that's our bots, right? These are all 7 of our bots that we've created here with you all, and y'all were able to see the process from start to finish. And now I am going to create a brand new bot with you. First and foremost, I need to, so I like to use ChatGPT in order to maybe flesh a couple of ideas out. So what we're going to be creating, and if you can't see this, let me know, but you should be able to. But if you can't, again, let me know. Go ahead and throw a comment in the box, and then, wait, fam, but you're not. I just want to make sure we're Gucci, because, bruh, didn't want to, hold on, fam. All right, fam. Let me know. Bet. If you can't hear, go ahead and let me know, and then I will, wait, let me get a little peek while I'm doing a little QA. Because there's one thing I just noticed I have to fix real quick. So while I'm fixing that, just watch our bots move. Now that you know all of them, go ahead and watch and make sure and see how they perform. See how it performs. All right, we're going here. We're going here. We are doing great stuff. Remember, I just have to update one quick thing. This is a live stream, right? So with live streams, there are going to be things that I just need to keep my eye on, right? So my eye, okay, it's Gucci. Now you're great. Now let's go back to our work. Beautiful sauce, all right? So what we're going to be creating is our night crawler. I should really make it crawler bot. This is a bot that is going to trade QQQ. Oh, I didn't bring up the QQQ holdings so you can see that. So let me bring that up real quick. QQQ holdings. And QQQ is the top 100 company, top 100 non-bank companies within the NASDAQ. And the difference between the NASDAQ and the New York Stock Exchange, right? The New York Stock Exchange is the older, more established one, whereas the NASDAQ is the electronic version. I don't want to say just electronic. It's all paper. It's all electronic, excuse me. And there's no shouting on the floor. And mainly what the QQQ, or excuse me, or NASDAQ is looking for is tech companies, right? So your Apples, your Microsofts, your Nvidias, and things like that. And what QQQ does, it loads, or excuse me, it's an ETF. Remember, ETF, Exchange Traded Fund. So let's go back to our little quilt. Each one of these patches represents a different company. And this particular ETF has 100 different tech companies, right? So there's Nvidia, there's Apple, there's Microsoft, Broadcom, Amazon, Tesla. Remember, this is Google, this is YouTube, this is Facebook, Netflix, Palantir, Costco, AMD or Advanced Micro Devices, Crisco, so on and so forth, right? So what QQQ enables us to do is to be invested in all these companies without having to purchase the individual shares. And the reason I like QQQ, again, it's a little bit more volatile than SPY because SPY is a little bit more diverse, right? So it's not all tech companies in SPY, right? Whereas QQQ is all tech companies. So the tech companies go up, QQQ goes up, but the tech companies go down, QQQ goes down, right? And QQQ follows the VXN. VXN is like the VIX little brother or big brother. Remember I said that before? Right? It is a volatility index that allows us to be able to gauge how volatile, how panicked, how calm, right, the underlying market is for QQQ. So what we're going to be doing is trading QQQ. QQQ is the top 100 tech companies within the NASDAQ. That beautiful. Let me just make this a little bit bigger. Within, can I spell? Thank you. All right, so let's do entry, exit, risk management, position management, session rules. All right, so beautiful. Was just perfect. So remember I was saying that there's a way for us to be able to get, so we can get a indicators from, okay, if I can find it, trading view, right? And again, not my game. I found this from another streamer. I'm not going to hold you, and I found it to be extremely valuable. So that's why I want to put y'all up on game in order to find and use these indicators. So I always want to make sure that you're seeing what I'm doing here. So what I'm going to do is, just to make sure you can, I'm going to zoom in. All right, you see where it says indicator on the top? I'm using trading view, right? And trading view is a place that allows us to be able to see real-time market prices for the underlying asset, right? And also has a community of other traders that create indicators, and we can use these indicators within our strategy. So let's go ahead and see how we use that indicator. So what I'm going to do, you see where it says indicator? I'm going to click on it, right? Then these are different indicators that the community has made, right? So there's a buy and sell pressure, there's a buy and sell alert, buying, selling volume, intraday, TS, Bollinger Band, plus BB. So all these different indicators, right, that the community has made. So let's say if I would just put options and then SPY. So let's see what we have here. The option millionaire SPY moving average, a tick strategy for SPY options, ENA for binary options for StratFat, not doing that, a 3 candle strike. Oh, that's interesting, but we can't do that. And a SPY option return calculations. So in order to get the underlying indicator, you see this little bracket here, and you see it just a populated source code. We're going to click on that, right? And then at the bottom, it's going to open up, I'm pretty sure, the source code, right? So this is the source code that we're going to use in order to, if we're going to use this strategy. So we say the basic signals are an 8 EMA crossing over the 21 EMA for bullish, and then the 8 EMA crossing over the 21 EMA for bearish, optimized for the 5-minute time frame. Now this one is not going to work. Reason being so is because we use 1-minute time frames. So being able to use this for 5-minute time frames, that's going to be a headache, and I don't want this headache right now. So what I'm going to do Pine editor is I'm going to drop this down again. Listen to me. Follow me, bruh. All right, beautiful. I'm going to go back to indicators and I'm going to say 1 minute SPY or just 1 minute. And let's see what happens. 1 minute EMA scalping, 1 minute RVOL for Michael, OBV 1 minute volume squeeze, scalp 1 minute crypto. So you can see we have a range of different strategies that we can pick. 1 minute crypto indicator. So there's one I seen up here that I wanted to try. OBV. Hold on. Give me 1 second. I'm going to find it. Full strategy with all-in-one risk management. Let's see what this does. So let's go look at the full strategy with all-in-one risk management. So this is Forex. This is currencies. Hold on. Let me just make sure. Data input from day. So total data inputs, and then calculate the start time and end time, in range, RSI, relative strength index, and then VRSI. Okay, so they're using RSI, MACD, and then they're calculating the RSI and the MACD. All right, so what I want to do, just to make sure I'm not losing anything, I want to take this pine cone code, and this looks promising. So let's see. And then I'm going to drop it here in Claude Code. And again, so just to make sure you saw how I did that, right? So there's no confusion. I clicked on indicators. Then when I went to indicators, I just put 1 minute, right? And then there's this full 1 minute strategy that popped up. Full strategy 1 minute. I just want to open the same one. All right, beautiful. And then I click on these brackets, and then you're going to see source code, right? They're going to open up the source code, pull it up, and then we're going to see this Pinecone editor, right? So Pinecone is a language that, TradingView uses in order to build out these indicators, for lack of better words. So then I'm going to take this one, I'm going to bring it over to ChatGPT. Then I'm going to say, okay, can you listen to me? Review the following pine cone indicator from TradingView. Now explain to us like we are 12 so we can understand what is going on here. All right, so that indicator is going to go. Let me go take a look at our bots and see what they're doing. Oh, there was a breakout detected, but there is an error. Who's having an error? Somebody's having an error placing. Okay. We're having an error placing orders. Failed to connect. There's a breakout detected, and then there was 2 breakout detected, but it had a problem. All right, hold on, fam. Hold on, fam. So it was a breakout detected, but it was having an issue placing the order. Bullish breakout detected, but it's having an issue placing the order. So what I'm going to do, I know I had to restart it. So let me just restart the bot real quick. Maybe it'll just be as simple as that, because I know IBKR is running. Right? So boom, clear, restart you. I know IBKR is running, so that shouldn't be the issue. You see IBKR, okay. I think I just needed to restart the bot. So that bot is reset. All right, let's go here. I think it was the same issue here. A breakout was detected, but it can't connect. Breakout Greek not available. What the she screaming? All right, breakout was detected, but it couldn't connect. Let me just go ahead and restart this bot. And when I QA them later, then I'm really going to figure out what the issue was. But, all right, come on. Listen to me, bruh. Listen to me. Listen to me, please. All right. Don't freeze. All right. All the other bots are running. Nobody's having an issue. Give me a second, y'all. Thank you. All right, and I'm restarting our Lotto bot. All right, Lotto bot has been reset. Let me just make sure IBKR is good. IBKR is Gucci. So why couldn't it place the order before? I'm glad I just put an eyeball on it. All right, our bots are running. So let's go back to our work. All right, bots are running. We're back on our work. We are finishing our work. Okay, beautiful. All right, perfect. Give a second. I'm just checking my levels. Perfect. So this is a trading strategy for Euro and USD on the 1 minute chart. It tells TradingView when to buy and sell automatically during the backtest based on the RSI, how strong the price moves. So what I want to do, like, I don't want to confuse us at all. So I'm not going to hold you. I'm going to drop that down. Just follow me, brother. Just follow me. I'm going to go back to indicators. I'm just going to put SPY, or excuse me, QQQ. V2, easy peasy. Okay, price levels plus custom levels. QQQ ladder adjusted active trick. Okay. QQQ a strategy. No. SPY QQQ VIX status. The SPY QQQ VIX multiple time frame trend table. SPY EAS map multiple QQQ levels. So I want to pick a strategy that's a lot more in line with what we're doing. Super long trend only, spot versus leverage. Okay, there's one. QQQ fair, QQQ NDX NQ price converter, price levels. So let's try this one. I said it was an easy peasy one. So let me do this one. All right. Easy peasy, bro, but damn. I gotta go to Claude for this one. I'm not gonna hold you. That's long ass fucking code, bro. Usually they're not that long. I'm not gonna hold you. All right. What we're going to do is review the following Pine code from TradingView and explain to us like we are 12 years old. Do I need to zoom this in? All right, let me zoom that in. I had to switch to Claude code because I know I can't put 1,000 in ChatGPT without it tripping. So I'm just going to move over to Claude real quick. Imagine you're playing a video game where you need to decide when to buy or sell QQQ, a popular tech stock fund. This code is a super smart robot helper that watches the market and tells you when to make the moves. The moving average, excuse me, think of this like the average path of the bouncing ball takes. The code watches several levels. The fast line EMA 50 reacts to quick to react like a sports car, slow and steady like a big truck. When the price crosses above these, might be time to buy. The ultimate RSI, the momentum meter. Imagine a speedometer that shows you if the market is going too fast, overbought, over 75, going too slow, oversold below 25, and maybe it speeds up. This code uses 3 versions: fast, slow, and then filter. We probably need to adjust this for 0 DTE, but I want to do that. An awesome oscillator, right? It shows if the market has momentum, 0, above 0, positive vibes, upward energy, below 0, negative vibes, downward energy, and it feels like watching. Excuse me. It's like feeling which way the crowd is moving at the concert. Standard deviation, volatility checker. It measures how crazy or calm the market is. Big swings equal high volatility like a roller coaster. Small movements equal low volatility like a lazy river ride. Stop loss, your safety net. This is super important. It automatically sells if you're losing too much money, like having a parent say, okay, that's enough video games for today. The code offers different stop loss types. A trailing stops, it follows the price up but stops you out if it drops X. ATR, average true range, based on how volatile the market is. And then high and low based on the recent high and low. How it makes decisions. Long buys trigger. The robot buys when it see a good signal, like the price crosses above the moving average. The RSI shows strength, but not too strong, and momentum indicators are popping up. So multiple indicators need to agree. Then this is the sell. Robot sells when it see warning signals like the price crosses above the moving average. The RSI shows weakness. Momentum turns negative. Indicator says danger ahead. A cool visual board. On the right side of the chart, you see the status board showing trend section, ultimate RSI section. Okay, beautiful. This strategy is smart, but it doesn't just use one indicator. It combines multiple. It waits for several indicators to agree before trading. It filters out bad trades, like not buying at the top. It protects you with automatic stop losses. It can adapt based on the market conditions. Bottom line, this code is like having a really smart friend who watches QQQ stock all day and uses math and patterns to figure out good times to buy, sell, or automatically protect you if the money goes wrong. The bar turns green, you own a stock. The bar turns red, you're betting it'll go down, and blue, you're still watching and waiting. All right, perfect. We want to adapt the strategy for 0 DT. Oh, wait. For, yep, 0 DTE QQQ options that we will be buying. Excuse me, the previous day, and then selling the next day. Does that make sense? Let's discuss. What I'm going to use both ChatGPT and Claude Code to be able to create it out. So I want to use Claude Code. It already has a running basis, right? Because it's using Trading View. But then I'm also going to use ChatGPT and give it no basis and see which strategy I'm going to use as the starting the foundation, right? All right, we want to develop an option trading strategy for QQQ. 0 DTE options. Remember, options that expire the same day, where the strategy will buy 0 DTE options that will expire the next day. So really maybe 1 DTE, but honestly it is 0 DTE because whatever. All right, that will expire the next day. Hold overnight, then sell within the first max 45 minutes of, well, 25 minutes when market opens. Let's discuss how we can do this. All right, so we're going to have both AIs trying to create this for us. So let's see how this works. So you're talking about a swing strategy for 0 DTE. This is actually a really good, interesting approach. Let's break this down. Day 1, 350, you buy QQQ option that expires tomorrow. Day 2, it opens closed. You manage the exit, and then we close the position. This is smart because 0 DTE options are cheap at the end of the day. Theta decay already happened. The overnight gap can give you a big gain if the direction is right, and you're essentially playing the next day's moves, right, with leveraging exposure. So key and things that we need to adapt: we enter on any bar when conditions are met. What you need is to enter in the last 10 to 30 minutes of the trading day. We need a time filter like 3:30 p.m. to 4, and only take signals near the close. Make sure that we're getting tomorrow's expiration. Exit. Morning exit if it gaps up, you take profit. Stop loss if it goes against you. Time based, we're going to close. No, we're not closing it by 3 p.m. I'm going to show you how we're going to do that. Signal strength for overnight holds. You want a stronger conviction signals. Multiple indicators aligning, not just one. Trending filters should be required, not optional. Maybe check the VIX. This is QQQ, so we're going to be checking VXN, not VIX. Risk management, 0 DTE can go to 0, right? Position sizing is crucial, maybe 25. Okay. All right. All right. A few things. Let me write them here. Position sizing, I know it's going to be starting capital. And this is how I build all of my strategies, right? Not again, I'm doing it a little bit different here. Enter. I'm doing it a little bit different here, but in essence, this is how I start all of my strategies when it comes to algo trading. So you all are seeing some really, really great stuff. If you do have any questions while I'm going through this process, please don't be afraid to ask. All right, let's wait. Let me put eyes on our bots because you know we got bots running. Who finished? This one's done at 11:30. You're done at 11:30. And you're done at 11:30. These two run until 44, and Lotto runs until 58. So I'm gonna let that finish. I just wanted to put eyes on it. All right, position management. Starting capital is $100. Okay, let me back all the way up because you know what I forgot to say? This is not financial advice. If you do seek financial advice, please make sure to speak to your, hold on, what the hell? Excuse me. This is not financial advice. If you do need financial advice, please make sure to speak to a certified financial planner, those that are licensed, a financial advisor that can give you the information that you seek. This is merely educational. So let's keep going. So starting capital is going to be $100. For balances less than, I want to do less than or equal to $4.99. $4.99 can use up to 80% of the portfolio balance. Balances between 500 and 1,000 can use up to, let's do 50% of portfolio balance. And then balances between, or balances greater than 1,000 can use 20%. 20%. Goodness gracious. 20% of portfolio balance. All right, so let's spell portfolio right. Jit was on my neck about that, homie. So this is my position management. This is basically what I use for all of them. Sometimes I'll go 90, sometimes I'll go 60, 30 here, but right now this is the levels I want to start. Let's also talk about exit. Max hold time is, we said 25 minutes. TP1 is 68. TP2 48, TP3 28, SL. So what's 68? And stop loss, what I'm looking for is a risk reward ratio of at least 1 to 2, right? Meaning that a test at least, bruh. Meaning for, let me just run this up. Meaning for every $1 that we risk, we are looking to make $2. That's not bad. So put that under our risk management. So that is how we're going to exit. Stop loss. So if it's 1 to 2, right now it's at 68%. What's 68 divided by 2? 34. That's a bit wide. Right now I'm going to do stop loss at 25%. And what stop loss equals, if position is at $100, for an example, and the position drops down to $75, a 25% loss. Exit now, bruh. Right? So that's what the stop loss is telling us. I need another eye. There we go. So that's what a stop loss is telling us. A take profit, TP equals take profit, meaning if we hit the level of 68%, sell now, bruh. All right. So exit whichever of these happens first. Of course, preference is to higher TP, but listen, we'll take what we can get. All right. So this is how we're going to exit. This is our risk reward. Now, here's the thing. We can have a stop loss, a trailing stop loss, trailing take profit, or we can have an MRE, right? The reason I don't like trailing stop loss, take profit, because these are a bit, okay, maybe I should have a trailing take profit. Okay, trailing take profit. So if we are up 25% on a position, activate. So we do not give back gains. Activate. But that's not going to make sense because our stop loss is at 20. So let me drop this to 20, and then you'll be 25. All right. So we have our exit. Let's go to our exit. Here is a few things for discussion. We have our exit. Then we also have, okay, exit whenever, just to make sure we clarify that. Then we also have a trailing take profit. I just want to put that in there so I know trailing take profit. What else do we have? Position management. We have our position management, and let me just put some session rules in right now. Only one trade per day. No, I'm just gonna start there. All right. Now let's discuss. All right, so I'm gonna let that go. Let's go over here. Perfect. This is a very interesting setup that actually can be structured in a into a specific overnight gap strategy using the 0 DTE, or technically the 1 DTE purchase end of day QQQ options. Let me walk through this step by step. We'll design a quant AI system that would breaking it into the concept, mechanics, entry and exit, the risk models, and the implementation. Overnight gamma gap play. That's interesting. Capture the overnight directional move in QQQ between the market close and then the next day open on using very short dated 0 DTE or 1 DTE options. Core idea is to buy options, call or puts minutes before close when any implied volatility is crushed plus the directional bias gives us your edge. Hold overnight through open and then sell within the first 25 minutes of the market open to capture the, did I say that? Yes, I did. To capture, I was going to say, when did you get the 25 minutes from? But I said it in the prompt. To capture the gap moves on the next day, key market behavior behind it. Overnight gap, 60 to 70% of the NASDAQ's weekly movement happens overnight, often due to the micro and future activity. QQQ futures and excuse me, move strongly on the global market sentiment, and then micro prints Zero DTE leverages the overnight gaps with high gamma but short risk window. You can benefit from the overnight delta exposure but avoid the theta decay since you exit early the next morning. So we're going to scan at 350, identifying the trend and momentum bias and volatility regime. Select the option at the money or out the money. Buying options expiring the next day. If it's Tuesday, we're going to buy options expiring on Wednesday. Hold overnight, monitor the future movement, right? And then sell between 9:30 and 55. Exit automatically, limit order or algo exit rule. Enter if the price is above the VWAP plus lagging indicator. Lagging indicator. I'm kind of scared using them. Lagging is fuck indicator, bro. Exit rules. All right. All right. A few things. We are using lagging indicators, right? How do you now remember we're talking about, I think what I want to do, hold on, candles. Remember we're talking about our candles before? Let me get the full explanation. Where's the candles? The candles, the candles. Explain the candles. All right. Here are the candles, fam. We went over this. If you want to go check out the previous video, it definitely goes over this in quite some detail, but I'm going to scan this. Oh, can we use this? The bullish and the bearish engulfing? So let me go over this real quick. The bullish engulfing, right? We see a small candle, right? The sellers are in control. And what candles are, remember, each one of these candles. Oh, if I can drop this. Oh, we got some. Damn, you see this breakout, car? Yeah, let me hurry up and finish this. Bro, nobody caught this breakout? Nobody caught this breakout? You didn't catch this breakout? Bro. All right, you're done. So 44 happened. I could go ahead and stop you. Nobody caught this breakout. All right, so we have 2 more bots running. So I'm just going to let them finish up. All right. Yeah, because I see it. What am I explaining? Oh, candles, right? So each one of these candles represents a story, right? So if we see a green candle, let me just use this one as an example. These 3 candles here, or these 4. I'm just going to use these 3. That's kind of crazy. So each one of these candles represents a story, right? So if you're looking at the candle, right, if we see a green candle, what that lets us know is that the buyers are in control, right? So the buyers and the sellers are going to go at it when the candle opens, right? To be able to see who's going to be in the control. The buyers are going to be the bulls of the market. If you're a bull, horns go up, right? So you're bullish on the market. You think the market is going to go up, bro. We would have caught a sweet ass play. Whatever. What was I saying? You're bullish on the market, so you think the market is going to go up, right? So each one of these candles represents a tussle, a tug of war between the bears and the bulls. So when you're selling, you're bearish on the market, bear down. You think the market is going to go down, right? So each one of these candles represents a tug of war between the buyers and the sellers. So when it opens up here, so you see we have one, the sellers are in control. I'm looking at this red one right here. But then the buyers, what are they going to try to do is get back in and try to see if they can get back in control. Now, the way that I'm looking at this is that this candle is going to form a doji. A doji lets us know is that there's a little bit of indecision. The buyers or sellers are vying for control. So you see the difference here. The buyers clearly won, right? But the buyers tested with these wicks, right? The wicks are these things that are sticking out. I'm going to try to make it as clear as possible. But the wicks are the things that are, oh, yeah, another breakout momentum. This is a classic bearish engulfing, bullish engulfing, right? You have the big candle and the small candles inside of it. Bro, this is a bearish engulfing. I'm sorry. This is a bearish engulfing. I think I'm going to use this. So we're going to use bearish and bullish engulfing. So let's keep going. So what these wicks are telling us is that the sellers or the bears try to hit a new low, but that low was rejected. So whenever you see a long wick like this, a low was rejected, right? If it's a bear, a high was rejected right here if it was a bull, right? So what this is letting us know is that, okay, there was indecision, but the buyers end up winning at the end of the day. And then this is probably on the downturn for being able to go down, right? So this is what I'm going to be calling a bearish. Oh, no, this is definitely no, because we have a small green. We don't have a small green, but let me go back. But it almost, bruh. So green and red. I really thought it was a bearish engulfing, but it wasn't reversing down. So let me talk about this real quick. Candle 1 is a small red. The sellers are in control. Candle 2 is a big green that fully covers candle 1. So we're using minutes. So when you see day, just put minute. Minute 1 was the sellers in control. Minute 2, the buyers in control, meaning the sellers pushed the price down, but the buyers came in and completely overwhelmed them. The large green candle engulfs the red one, often marks the start of a short-term move up. Psychology, the bears tried but failed. The buyers stepped in hard. This appears after a downward trend or a sharp sell-off. Then we have the bearish engulfing, right? This is a small green candle. And then we have a big red candle, meaning that the buyers were in control. The buyers were in charge, but the sellers took over violently, right? Wipes out the prior green one. This often starts a downward move, right? Bulls got trapped, sellers seize control. This happens after an upward trend or strong rally, right? See, so let's look at it. So we have our big green candle, then a small red candle, right? So the big green, small red, this lets us know that that's the thing. This is kind of a little bit mixed. So let's see if we can find another one that's a little bit more. I already have morning and evening star. The three soldiers. Maybe I want to use the three soldiers. Do you want to use the three soldiers? Let's use the three soldiers. Because that'll be an interesting one. 3 minutes, and I think that's good. Buyers consistently showing stronger each candle, momentum snowballing upwards. Bearish version, sellers are steadily winning, momentum snowballing downwards. So I want to use the three soldiers. All right, so let's go back to our main strategy. Beautiful. No, I didn't ask you for that one. Where's the main strategy, fam? Fam, where's the main strategy? Hold on. It's Mick tripping right now. It is Mick tripping right now. All right, while you figure out your life. Okay, so let's get serious. Let's break this down. You've got a tight professional risk management system here. I love the precision. 68%, 48%, 38, 28, and then stop loss at 20, max hold time of 25 minutes. If you risk $20, the math, if you risk $20, you lose $20. You need to make it at least 40, which is 2 to 1. You risk 2 to get 1, right? That doesn't make sense. If you risk 20 to make 28, that's actually a 1 to 4. You risk 20 to make 48. You risk 20 to make 68. TP3 doesn't meet your risk 1 to make 2. So I need to increase that a bit. Drop TP3 entirely. Only keep TP2 and 1. Tighten your stop loss to 14 or move TP3 to 40. I'm going to keep it at 28 right now. I understand what you're saying, but I'm going to keep it at 28. Follow me, but don't follow me. The trailing stop, the safety net. When your position hits at 25%, activate a trailing stop. Purpose, lock in the gains, don't give it back. Trailing by how much? Trail by 10%. So if you hit 50%, the trailing stop trails 40. Trail by 15. Trail to break even. Guarantee no loss once you hit 25%. That's interesting. I think I'm going to trail by, let's trail by 10. We're going to trail by 10. Does this replace the TP3? If you hit 25%, do you lock in the trail stop to lock in the gains? Keep riding it to TP2 and 1, or just take the 28% and exit. Once you hit 25%, it activates the trailing stop at 15%. This means if you hit 50%, your trailing stop at 35%. If you hit 68%, you're out already. And if it reverses to 40, you still walk away with 25%. This protects you while giving you room for TP2 and 1 to hit. Position sizing. All right. We talked about that. Growth plan. If 68% win, okay. If lose, I'm not dropping it to, okay, issue with the 80% of the account, one loss down 16%, two losses in a row down 30, three losses in a row 57. After three losses, you need to gain 73% back just to be at 100%. I'm not using, this is almost like Kelly criterion, but I want to do what I have. No, keep your system required. Nope, keep my system, bro. Best time for 0 DTE. This is aggressive but smart for 0 DTE. This is why high volatility midday chop. Okay. All right, 25. Avoid. Catch the morning. Continuation of play, and then power play momentum. Okay. So, no, we are going to keep the TP levels for now, and for trailing stop, let's activate at 10%. Keep the position sizing where it is at. For entry, are you entering the previous day, end of day, or same morning, same day morning? You said previous day. No, we are entering the previous day EOD or close to it, and then closing the next day within 25 minutes of market open. Strike selection is going to be OTM out the money with a delta range of 0.15 to 0.6. I told y'all I had to do the little max trade a day. 6 max 1 per day. Now let's discuss. All right, so while that's outputting, let me go here. All right, few things. We are using lagging indicators, right? We want to know if we can use the little soldiers, both bearish and bullish in lieu of this. If so, let's talk this out. All right, we're doing great. Again, this is part of the process. I'm just building out the strategy right now. This is before we even get to the code. So I'm building out the strategy. I'm going to let that output come here. Perfect. Now we're cooking. Let me recap what we locked in. Then we'll discuss the strategy flow. The take profit, okay, from market open. 25 minutes from the market open, trailing stop acting at 20, activates at 25, and then it trails at 10. Position sizing, the exit rules, enter near close, then we're going to exit within the 25 minutes. OTM, max 1 trade per day. Monday, the trade flow is the strategy runs analysis on QQQ. Multiple indicators align URSI plus A. I am not using all this shit. I'm not going to hold you. I'm going to simplify this, like super simplify this. Signal says bullish for tomorrow, scans for the chain for Tuesday, 0 DTE, finds it, enters a position, and then holds overnight. Tuesday, the next day, the market opens, check P&L immediately, set alerts for TP, the TP levels, set a stop loss at negative 20%, and then timer starts, bullish gap up, already up 40%, hit the TP level, triggered, and exit with our open, choppy, okay, exit, and then stop. You said delta between 0.5 and 60. This is a wide range. Let me break it down. 0.60 is closer to at the money, more expensive, higher probability of profit, lower gains. Sweet spot, lottery. Okay. Few things. We are going to do both calls and puts for this strategy. And we are, okay, call the puts for this strategy. That's 1, 2, signal strength. We need to go over the entry again because we feel that It is too much. We want to break it down. 3 blackout dates we can discuss. 4. All right, we'll go with the delta of 0.15 to 0.44. 6 pre-market checks. Pre-market future check, skip trade if future is down 1%. If this is useful, then yes, but complicated, we'll skip. How would this work anyways? We are going to backtest for 1 year, but again, want to flush out this strat first. And then time chart time frame is 1 minute. All right, so let that go. All right, you're exactly right to question the lagging indicators RSI plus EMA for the strategy, because for a same day entry and then the next morning exit, lagging tools will almost always react too late. So your thought of using candlestick microstructure like the 3 white soldiers and then the 3 black crows, what you said, the little soldiers instead of the lagging indicators, are spot on. Let me unpack this and see how we can fit it into your overnight QQQ zero DTE strategy. Why this matters: the RSI and the EMA need at least 1 to 3 bars. You only have 10 minutes before close to decide. You want an immediate intent that the candle sequence can give that. So instead of momentum by math, let's use momentum by price action instead. The little soldiers concept is the bullish one. We have 3 white little soldiers, 3 consecutive green candles, each one closing near high, each higher high than the last. A strong controlled buying institution accumulation. Possible entry before close if pattern ends late in the day. Bearish soldiers, excuse me. Consecutive, each following the near lows, each lower than the last. A strong control by the sellers. Possible put entry before close if pattern forms near resistance or weakness. So we can use this micro momentum pattern as our confirmation to take the overnight directional exposure. When and where should we detect them? We don't need the full day pattern. We want to use entry day mini soldiers, especially on the 5-minute candles between. So I want to use 1 minute candles. So I got to update that. All right. All right. We are using 1 minute candles. Let's update and discuss. All right. The big issue is the entry logic is too complex. You're 100% right. The code has 8 plus. That's crazy. 8 plus different triggers, and it's overwhelming. Let's strip it down to its essentials. Let me propose a clean, simple approach. The 3 pillars: trend. What's going on in the market? Momentum. Is it moving with strength? Entry timing. When exactly do we pull the trigger? Let's break it down. Trend, the big picture. Don't fight the overall trend. Simple. Bull trend, the price, EMA 200. That EMA 200, bro, and EMA 50, that's all right. Again, still a bit lagging. Let's make them fit for the zero DTE strategy we are discussing. Let's proceed, and still using the 1 minute charts. All right, switching to from 5 minutes to 1 minute is a big step because it moves the 5 little soldiers concept from micro intraday to micro intraday detection right before close, which is exactly what you need for the overnight zero DTE strategy. Let's go over this carefully so we can design this with precision, not noisiness. At 1 minute resolution, you see the institutional footprint. Algo buying and selling that 5 minute averages high. You can capture the final minute accumulation or distribution leading into close. Yes, there's more false signals, but you'll need tighter rules with volume confirmation. We'll turn the 3 little soldiers into a scalable 1 minute momentum sequence, basically a micro tape read. Defining the little soldiers on the 1 minute QQQ candle, a bullish soldier micro version, 3 consecutive green candles. So close, okay, for 3 bars. Each close is greater than the previous, a strict higher close. Each candle body is greater than or equal to 60% of the range, showing conviction. The volume increasing steadily. And I'm probably going to drop this and drop this. But hey, I like what it's doing. Buy QQQ at the money or 0.05% out the money. All right. Why this works and is better for your strategy. The micro sequence often represents algos repositioning into the close. The overnight gap frequently continues the late day momentum. You only hold for 12 hours. So what matters most is the short-term flow, not the long-term lagging signals. This approach essentially uses the 1 minute soldiers as a flow proxy. So timing scanning window is from 340 to 348. Continuously check the 1 minute patterns. We enter before 357 to 359. Overnight hold. And then we exit the first 25 minutes. Bull sequence. Simplify. Bear sequence. All right, perfect. A few things that I noticed. We want to update each candle body from 60% to, let's do 30%, and the volume to 0.4 for both bulls and bears, and see the position sizing. You're going to need that. Which also are you going to need? The take profit levels. And I'm not going to bring in a trailing stop with this one because I want to gauge. All right, now let's discuss. Perfect. Let me go back to Claude. All right, so let's lock this down for the 0 DTE strategies. The entry rules the previous day on the 1 minute chart. So that 200, but that's still crazy. A 200-day EMA. All right. A 200 EMA is crazy, bro. Crazy long for a 0 DTE strat. We need to adjust so it works for the speed of which these type of contracts move. Let's rethink the enter, since we kind of already have the exit. All right. More inclusive captures the subtle soldier patterns, the moderate and neutral volume, same. Okay, 3 consecutive, beautiful. Each close within the 30% range, 40% by 0. Oh, I forgot the fuck. Okay, hold on. Before we are buying 0, OTM calls and puts with the delta range of 0.15 to let's do 48, and premium min of 0.10. What else do I want to do? What else would I want to do? Now let's update so we can review the strat before we proceed with the back test. I really do like this. I'm not going to hold you. A 200 EMA on a 1 minute for 0 DTE is way slow. No shit, Sherlock. We're talking about contracts that live for hours, not days. So we need to rethink the 0 DTE speed. We need indicators that are fast and responsive for intraday moves. So we're entering at 3:30 to 3:50 and exiting at 9:30 to 9:55 the next day. We need an answer to what tells us that QQQ will gap up or gap down overnight. Key factors is end of day momentum. Is it closing strong or weak? That's why I'm using the little 3 soldiers, but I'm not going to bring this over here because I don't want this strategy accumulation strategy process, right, that I'm using with Anthropic to know what I'm doing with Claude. So I'm gonna keep them separate. Then we're going to compare them and see how well it performs. So let's keep going. Trend in the final hours, the RSI positioning, the volume, and then the market structure, the proposed simplified entry for 0 DTE. That 20 EMA that's still slow, bro. This will capture immediate trend. Okay, momentum up, momentum down. Indicator 1, momentum indicator. Okay. We still think that the 20 and 50 EMA is really slow. And also we want only 2 max indicators for entry. Let's discuss, bro. All right, let's go here. Get off my neck. All right, so let's lock in what we've gotten so far to align before coding or simulating anything else. Market, we're doing QQQ, not SPY. We're doing QQQ. 1 minute candles pattern is going to be the little soldiers. Bullish soldier is 3 consecutive bullish candles. Each body is 30% of the total. Okay, volume. Then we have the bearish. We enter out of the money calls or puts, the delta range, minimum premium. Buy out of the money after a bullish confirmation and then bearish confirmation, execution, enter on the third close of the pattern. Okay, position sizing, exit, whichever happens first. Volume confirmation. Should we increase the volume confirmation across the 3 soldiers? Should we require volume confirmation? Nope. Time filter, trade only, high liquidity windows. Nope. Directional confirmation. Nope. Adaptive take profit. Nope. What did I want to do? I wanted to do so. Oh, we are trading QQQ. Trading QQQ for this strategy. And what else did I want to add? All right. Now let's lay it out before we begin coding. We are calling it night crawler. All right, I have that one. Let's go back here. You're right. Let's keep it tight. Max 2 indicators for entry. You're right. Even the 20 and 50 EMA is way too, bruh. Follow me. I was going to go 3, but let's see. 7 minutes and 14. I was going to go 3 and 5. I still think I'm going to go 3 and 5. Already in your code, fast and responsive, clear buy signals, momentum, can whipsaw in the choppy conditions, no trend filter. I do is use URSI plus the signal. URSI, smooth, fast, cons, 50 minutes, nope. Awesome oscillator plus standard deviation. OA crosses plus standard deviation. 2 different type of signals, momentum plus volatility. AO can be lagging on 1 minute. EMA, okay. Still using EMA, which you said is slow. Both fast indicators, standard deviation equals volatility and momentum. URSI equals strength confirmation. Both are in your code. Could be noisy. Need to test to see which one's better. Momentum, single candle can be misleading. No trend context. Okay, I'm down for this standard deviation fast and this URSI fast. What is a, and I'm going to decide which trend one do I need. Yeah, that was my why combining. So this is my choice right here. Standard deviation fast plus URSI fast. Combining volatility expansion standard deviation with the momentum direction URSI. When both align, strong moves likely occur. The fastest momentum signal, perfect for catching end of day plays. I was going to do 3-5. I think I'm going to do this one. I'm going with option 5. All right, we are going with option for this. Now let's lay it out so we can discuss. Maybe I'm going to code both of these like at the same time and see which one does it. Nightcrawler, QQQ overnight 0 DTE strategy, capturing overnight moves in QQQ by buying short dated out of the money calls or puts based on the micro momentum 1 minute candle patterns, the little soldiers holding overnight, exiting within the first 25 minutes of the next day. Market time frame, underlying QQQ instruments, the 0 DTE. If I'm talking fast, let me know, because I do that. So if I'm talking too fast, let me know. All right, resolution, 1 minute, trading window, last day momentum, exit the next day, enters the little soldiers, option selection, position management, exit. I'm not doing this. I like this. What do y'all think? So ChatGPT finished. Let me go ahead and bring our ChatGPT version. Here is the ChatGPT version of the strat. Beautiful, beautiful, beautiful. Have my little Nightcrawler. 1. All right. Perfect. 2. Oh, this is going to be real interesting, y'all. We may have something interesting on our hands. We may have something interesting on our hands, fam. Nope. All right. I just want to get these out the way. I know it's all right. It's just gonna piss me off. So I figured let me just clear it real quick. 4. All right. 5. And then exit. Okay. Perfect. And then all right, beautiful. So we have our strat. We have our first one, bruh. So we have our ChatGPT version. Let me just make sure it's not, bruh. All right, hold on. Let me get this right. Let me get this right, because right, max hold time, perfect. So now we have our ChatGPT version. I don't like that. A little scorpion. I don't like that. All right, hold on. Let me copy. And then I'm going to go to, did it switch? I don't think it switched. Hold on, y'all. All right, we are on cursor. You should be able to see cursor now. Let me make sure. You should be able to see cursor. All right, we're on cursor. So what I want to do is open up a new project. We're going to go to our options folder. We're going to open up make a new folder. Call it Nightcrawler. Perfect. Open up that folder. I just need to paste you here for right now, just as a little temp. So then now I need to open up Claude Code. Boom. Now we have Claude Code open. But remember, I need to open up the 4.5 version. So let me go get that command real quick. Olan. So let me close you. Clear, if I can spell that right. Here's a 4.5. Let me grab our strategy. I can close that part. And again, I'm using cursor, and with inside cursor, I'm using Claude Code. We're going to be coding this in Python. But before we do that, let me introduce the strategy to Claude Code. So review the following strategy that we are looking to backtest. Let's discuss before we proceed with the actual back test. All right, perfect. So while that one outputs, let's go back and look at Anthropic. This is going to be interesting. All right, so locked in entry the previous day, the 1 minute. So let's do indicator 1. That's still 20 minutes, bro. Let's see. Let me see. 9. Slow. Okay. We're bullish. Okay. Position sizing. Exit system. Blackout dates. First Friday of every month. Non-farm payroll. 10 and 15th of every month. CPI inflation. I don't know about this. Major QQQ earnings. Okay. That means I would have to get this information. Yeah, because overnight plays for those, like, it can cost you your ass. I'm not gonna hold you. Why it matters: volatility, expansion, and contraction with directional bias. The calculation: take the standard deviation of the last 20 bars, multiply it by the direction of the price up. Positive expanding volatility up, negative expanding volatility down. Standard deviation of 9 periods of EMA. Smooth. Okay, why this works. Can we go? Okay, before I even do that, I'm kind of exhausted going back and forth with that. So I'm just going to work with the one that I have right now. Okay. Before back testing, here's a few considerations and potential issues. I already have that data, so don't worry about that. Out of the money, bruh. Slippage fill, low liquidity windows for a 0 DTE. Wide spreads can destroy this. Should we assume the mid price plus slippage? Missing, what if the bullish soldiers form but then the price drops before you can enter? Should we confirm above pattern, high or low? Okay, for puts. Exit ambiguity, exit whichever's first. The preference orders TP1, 2, and 3. Does this mean you exit all of the position at TP1 or scale out? All right, let me answer these questions. I do have the data. Let me go grab the data real quick because I thought, hold on, I do have the data. And you know where's the data? The data is Momo QQQ. Momo is QQQ. So let me go grab this data real quick. Okay. One. We do one. We do have the data. We will let you review once we iron out these questions. 2, which takes priority. Let's create a simple weighted system that can select the best choice for the option based once the signal has been triggered. 3, we have a backtest reference that we can use for this in order to determine what this would be. 4, volume confirmation. Do you mean that for the option volume or QQQ volume? QQQ volume, bruh. 5, may need to backtest on multiple months and years to get statistical meaning. 3 consecutive soldiers in an 18-minute window, 2 to 5 signals a week. Realistically, we may need to backtest. Okay. Engage results. Hold on. I ain't gonna hold you. I may need to step out and be right back. I didn't think I need to. Whatever. 5, and then let's do 6. Missing pattern. Yes. Let's confirm before so we can ensure good and ready. Again, not overly complex though. 7, We exit all positions once any of those TP levels hit preference on higher one, but still exit no matter which one hits. No scaling out. All right, there's my answers. Now let's see what this is going to bring. There's my answers. We are doing fantastic. Fantastic. All right, beautiful stuff. So let's create a weighted scoring system to pick the best option moving forward. All right, I'm fine with that. Primary risk reward driver, need a meaningful momentum. Spread tighter, equal better fills. Volume, okay. Weighted sum. Do you have the previous back to? Yes, I do. All right. First, let me give you, you need the data. Data. I'm repping data. I'm repping data. All right. Here's the QQQ data. Here is the QQQ data first. Review. Use the Conda environment. Use Conda environment to run terminal commands. Then advise findings before we give you the reference code. All right, I'm not going to hold you, so I'm going to tell you this right now so you don't think that I'm pulling wool over your eyes. I'm going to need to step out, but I'm going to be back, right? So I'm going to step out. We're going to take a bit of a pause, like in another 5 or 10 minutes or so. So I'm going to need to step out. I'll be back, but we're going to finish this work. We made great strides. So this is just part 1. Part 2 is going to be coming up. So let me update the title real quick so y'all don't, oh, but you didn't tell me. Yes, I did. Yes, I did. Oh, you know what? There's bots that are done. So I can stop you. I can stop you. And I can stop you. So everybody's done today. Everybody's done. Part 1. So make sure y'all don't get off my neck about this. Wait, why is it? It shouldn't be. Why is it? Okay, there it is. That's the right one. Part 1. So let me save that. So you have part 1, and then it's going to find its data. Bro, get right. Give me right. I don't know. Should I just leave y'all with I'll be right back video so I can just let this stream go, or should I just stop and then start again? I think I'm going to stop and then start again. That's what I'm going to do. Oh, you know what I need? I need to open another one anyway. So if this little soldier one doesn't pan out and I don't like it, then I'll go grab the other one from what are you doing? All right, I need to go grab a reference backtest. So hold on. The reference backtest that I want to use, since I'm using QQQ, I'll use sniper backtest. Let me go ahead and grab this one, and then you can review. Let me paste it here. Rename reference ref BT. Let's just make it super simple. A reference backtest. So hopefully I can get it to like go through the backtest, understand it, and then by the time when I get back, like we're gonna just be running. running our back test. And then once we run our back test, we may need to optimize it a little bit based on the performance. And then after that, we could run it, y'all. Run our back test. So I'm super, super excited and interested to see like how this is going to pan out for us. I do have 24, 23, 22. I didn't get 21. So 24 through 20. I think I have 25, I think. QQQ data. I got this data from Theta Data and also got this data from IBKR. IBKR is where we paper trade from. So if you open up an account with them, that's free. I got also the data from Alpaca. Alpaca, if you open up an account with them, that's free. The only one that you kind of have to pay for is Theta Data, but it's worth it, bruh. There is Polygon or Massive, but if you know Polygon, Massive is the new one. I don't like it as much. Reason being so is because it's not as comprehensive as Theta Data, right? So that's why I kind of transitioned over from Polygon, aka Massive, to Theta Data. So what we're doing, it's checking the data, making sure that it's Gucci. Then what I'm also going to have it do afterwards is check the reference backtest. So once we check the reference backtest and the data, we're going to be running, y'all. We are going to be running. And if you want me to go over the backtest, the code, see how it works, it is Python. I need 5 comments. I want to see the code. I want to see the code. So if I see those 5 comments, I want to see the code, then I'll go ahead and get you right. Greeks end at 3 p.m., not 5:40. All right. Strategy needs to enter, but Greeks file only goes to 3. Use the 3 p.m. as a proxy. Delta won't change that much in 40 minutes. All right. Let's double check and make sure. Also, here is the backtest reference file. Hold on, copy. First, we need you to propose when we should enter based off this information. Then also how we should create backtest. So what I'm going to do, I'm going to pause right here. I'll be back in like 15-20 minutes so we can finish up this work. This is part 1. We're going to be finishing up part 2 soon. So it is your boy Kreative. I know you're not going to be missing anything. Trust me. I'm going to pick up where I left off. So this is the only thing that I'm going to run, and I'll be right back.